Hello and welcome to Flagstaff TV. Today we're joined by Paul Griffiths, CEO of Predator Oil and Gas, who is joining us from Morocco. Welcome, Paul.
Good afternoon, Catherine. Good to see you again.
Paul, please can you start by summarising the MOU-5 drilling opportunity for us?
Yes, well, as I sit here in a very quiet setting, which is about to turn into bedlam over the next 2 days, with the arrival of nearly 100 people, there's people here already, but with the arrival of nearly 100 people and vehicles and the rig and everything, we're all set to spud on Monday, March the 3rd. So very pleased that this whole operation has got together very much more efficiently than any of our other drilling operations over the last 3 years, right on schedule to what we planned as our window for drilling, right on schedule in terms of budget. And it's just great to be working with a set of professional people who understand the business, who understand the oil and gas sector, unlike the market makers. So what's happening next is we'll kick off the drilling on Monday. At some point during Monday when all the boxes have been ticked from a health and safety perspective. In terms of what the opportunity has never changed. It's always been there, even though our share price has changed over the last 9 months. The opportunity has never changed. The target is a Jurassic target, never before tested in Morocco. It's the largest potential risk-reward opportunity in the world. Onshore at present. We're the only company drilling in Morocco this year. And when I say it's the best opportunity, there's a reason for that. 187 square kilometers, potentially game-changing in terms of multi-TCF potential. Helium being tested in Morocco for the first ever time. $2.9 million well. We have 100% of the project. Our partners only has 25%. We're 2.5 kilometers from the Maghreb pipeline. And we also have the best tax regime in the world, no corporation tax for 10 years. So anybody else out there who thinks they're a better prospect onshore, anywhere in the world, well, please send me the details. I won't invest because the market won't give any value for that prospect. But as far as Predator concerned, as far as ONIM is concerned, as collaboration partners, and as far as all the gas marketeers are concerned in Morocco, this is a big opportunity. So I don't really care what the market thinks. And neither should our shareholders. Our shareholders should focus on the value of the asset, not what the market thinks the value of the asset is. Sorry, the market makers.
Paul, why is the enterprise value of the drilling opportunity not reflected in the current share price, given that none of the fundamental value drivers have changed over the past 9 months?
I think I wouldn't be alone in CEOs at present who are absolutely furious at the London market and the capital markets. 88 companies left the London market last year. And there's some very big names lined up to leave this year. That tells you there's a fundamental problem with the London market. But the biggest problem faced by all companies over the last 9 months is the lack of liquidity in the market. And that means the market makers run riot. They can control the share price. They're making small margins because they're small people, small businesses. You know, they can make small margins and still be very happy going home in the evening. They're not like the companies that are being impacted by this in terms of trying to build businesses for their shareholders, for the local people here, for example, in Griffiths, very important operation. Just to give you an example, we pay 13,000 dirhams in extra compensation for some olive trees, and the London Stock Exchange is charging us 200,000 dirhams equivalent to enter 4 million shares to emission trading. Disgusting, basically, but they're doing their bit for ESG and Morocco. You know, we could spend that money here and these guys would be very happy. So that is one of the problems, the way the market makers dominate the market right now. It's a forced market, in my view. How can we be a share price less than we were 9 months ago, where absolutely nothing in the company has changed? And it's poor understanding. They don't understand the business. All they understand is trading on a short-term basis to make that tiny little profit margin so they send their kids to public school.
Paul, what's next after MOU-5?
So after MOU 5, we, depending on the results, and we can't predict the results of drilling, and neither will we. But irrespective of what those results are, we go back to MOU 3 and we perforate the shallow gas, which we haven't perforated at all. We flow that, and then the plan is to take out an exploitation concession around that to get that project moving as a CNG development. We already have a big backer for that, who I've met this week in Morocco. So very happy to proceed with that. We'll go back and then test the lower zones in MOU 3, but the priority is to get gas to an exploitation concession application as soon as possible. Thereafter, well, there'll be all kinds of opportunities for further drilling and further work on MOU 1 and MOU 4, but we don't want to push that work, all that work at the same time. The priority for us is to get gas to market and find the easiest zone to deliver that gas and get it to market. We wasted a year, freely admit, we wasted a year last year because of the difficulties we had in drilling those wells and testing them. You just have to remember that we're the only company in northern Morocco that didn't take a license where there was an existing discovery. So we've had to build our learning curve from scratch. We've created 2 brand new gas plays, one proven, the biogenic gas, and the Jurassic play, which is going to be tested very shortly, which potentially is a big game changer. So we've done that from scratch. So ONHYM and our partners are very appreciative of what we do. We work very closely with ONHYM. They recognise the contributions we've made and the potential value that's potentially going to be created here, even if the market makers don't.
And Paul, why do you consider Trinidad a second core asset of the company?
Well, Trinidad is known oil. They've been producing oil for 100 years. We've managed to create a series of transactions and a position over 2 or 3 years that allows us now, by end of April, we'll have 4 producing fields, and we'll be pushing ahead with Cory Moruga workovers and hopefully Cory Moruga drilling later this year. And the drive for that is basically production income that we can get, and I will be getting obviously very shortly for the rest of the year, is sufficient to fund overheads and to reinvest in Trinidad and potentially some left over from Morocco. So the driver here is we do not want to go back anywhere near the London market in the foreseeable future. So the only way we can do that is drive for production in Trinidad and cash flow.
Paul, finally for today, what is your view of the widespread media criticism of the London capital markets in relation to the undervaluing of the assets of companies and liquidity issues related to the exodus of investors from AIM and the Standard list?
Well, I've already touched on that. I think, the fact that 88 people have voted with their feet and left last year should be a wake-up call to LSE and the FCA, by the way, who are supposed to regulate the market. The fundamental issue for me, some say it's an over-regulated market. Well, perhaps in a bureaucratic sense, but it's under-regulated in terms of oversight of share price movements, the way social media now is governing share price movements. So example of that is, I think we were around about 10p last July, August, September, and moving on very well. And then somebody planted an article that effectively was the beginning of a drop in share price to a situation in end of October, November, where we were literally forced to do a placing to stop the share price falling any further. We thought we were placing that amount with a single institutional investor. 2 months later, we found out it was a market maker. Well, we would never replace those shares with a market maker. So there's not, in my view, sufficient oversight of the market. We're disgusted, frankly, as a lot of people already know, about the events that happened from August, September last year. And I can promise you that we all are focused on getting value out of MOU 5 and getting value out of the company. But if we come into a situation by the end of June this year where we're not seeing that value reflected in the share price and we continue, then I personally will go after those people who I consider responsible, and I will not stop. I will be the Mr. Bates of the LSE and the FCA. I will go to the Treasury. I'll call for a parliamentary committee to investigate the FCA and investigate the LSE in terms of not providing sufficient protection for small companies and mid-cap companies and their shareholders over the last 6-7 months. They've sat by and allowed mayhem to be created in the AIM and the small cap market and done nothing, yet still charge fees, 22,000 a year, for example, to the FCA for what? Regulation of the market in our terms? It hasn't been regulated. 16,800 to LSE to issue to admit 4 million shares. Well, how is that value for money? So I'm very, very adamant that I've come to a time in my life where I don't take this sort of behavior anymore. So when we come to, if we come to the end of June and our value is still being dictated to by a market that hasn't moved with the times, then there will be repercussions.
Oh, thank you very much for your time today.
Good.
And thank you for watching Flagstaff TV.